Welcome to the Oligo News. In a significant move, the Reserve Bank of India (RBI) has reduced the repo rate by 25 basis points, bringing it down from 6.5% to 6.25%. This decision marks the first rate cut in nearly 5 years and comes during Governor Sanjay Malhotra's inaugural Monetary Policy Committee (MPC) meeting. The repo rate is the interest rate at which the RBI lends money to commercial banks. A reduction in this rate makes borrowing cheaper for banks, which can lead to lower interest rates for consumers on loans such as home and car loans. This move aims to stimulate economic activity by encouraging spending and investment. India's economic growth has been facing challenges, with GDP growth slowing to 5.4% in the quarter ending September, the lowest in nearly 2 years. Factors contributing to this slowdown include high inflation, stagnant wages, and weak consumer demand. The RBI's decision to cut the repo rate is intended to address these issues by making borrowing more affordable, thereby boosting consumption and investment.
The MPC unanimously decided to reduce the policy rate by 25 basis points from 6.5% to 6.25%.
Following the announcement, Indian stock markets responded positively. Interest rate sensitive sectors such as banking, automotive, and real estate saw notable gains. The Nifty 50 index rose by 0.35% to 23,684.2, while the BSE Sensex increased by 0.28% to 78,274.35. Economists and industry leaders have largely welcomed the rate cut. They believe it will make loans more affordable for consumers and provide a much-needed stimulus to various sectors of the economy. However, some experts caution that the effectiveness of this measure will depend on how quickly and to what extent banks pass on the benefits to consumers. The RBI has indicated a shift towards a more accommodative monetary policy stance, suggesting that further rate cuts could be possible if economic conditions do not improve. Governor Malhotra emphasized the need for a balanced approach to support growth while keeping inflation in check. The biggest beneficiaries of the RBI's repo rate cut from 6.5% to 6.25% will be 1. Loan borrowers, home, car, and personal loans. EMI will reduce. Banks and NBFCs, non-banking financial companies, are expected to lower interest rates on home loans, car loans, and personal loans. New borrowers will get cheaper loans, making it easier to buy homes, cars, or fund personal expenses. Existing borrowers with floating interest rate loans will also benefit as banks reduce lending rates. 2. Real estate sector. Lower home loan interest rates will increase housing demand, leading to higher property sales. Builders and developers will see more buyers, boosting real estate growth. 3. Stock market investors. Lower interest rates make stocks more attractive than fixed deposits. Sectors like banking, real estate, auto, and infrastructure will benefit the most. Stock prices of banks, NBFCs, and housing finance companies may rise as borrowing increases. 4. Businesses and industries. Lower interest rates mean cheaper loans for businesses, helping them expand. Startups and MSMEs, micro, small, and medium enterprises, will benefit the most, as they depend heavily on loans. Manufacturing and infrastructure projects will get a boost due to lower borrowing costs. 5. Automobile sector. With car and bike loans becoming cheaper, more people may buy vehicles. Automakers like Tata Motors, Maruti Suzuki, and Hyundai may see higher sales. The RBI's decision to cut the repo rate is a strategic move aimed at revitalizing India's slowing economy. By making borrowing cheaper, the central bank hopes to encourage spending and investment, providing a much-needed boost to economic growth. As always, the actual impact of this policy change will depend on various factors, including how banks and consumers respond in the coming months. Thank you for your valuable time.